Everything you're about to hear is for education and entertainment purposes only. Whilst we are licensed, we're not aware of your personal financial circumstances. Any advice is general advice. Equity Mates operates under Australian Financial Services Licence 540697.
Equity Mates!
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the first time, a massive welcome to the community. We cannot wait for you to get stuck in with us today. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. We have a couple of returning favourite segments.
Yep.
Pimp My Portfolio with Adam Dawes is back. And Mr. Beat Up, where Simon comes on and shares companies that may have been oversold. We're also going to cover heaps of news. But before all of that, two key pieces of housekeeping.
Yes, so the Equity Mates live show in Brisbane is selling fast.
We are 80% sold.
Yeah, at the time of recording. Could be sold out by the time this episode is released.
Yeah, so if you are in Brisbane, come and join us. We're heading north. We are doing a live show at the Good Chat Comedy Club. $30 a ticket. We're framing it as property versus stocks because we're going to be joined by Sam Gordon from Australian Property Scout.
Yeah.
But I think the conclusion is, why can't we have both?
Affordability for housing, Ren. Really excited for it. So head to the link in the show notes to grab your tickets. They are selling fast, may already be sold out. So cannot wait to see you up in Brisbane. And secondly, we wanted to give a shout out to one of our good mates and one of, I guess, the Equity Mates' favourite guests here on Equity Mates, which is Charlie Viola. You may have seen in the news that he's going out on his own now. He's done a buyout of part of the business at Pitcher Partners and has started Viola Private Wealth, what he hopes to believe. And I'm sure will be one of Sydney's, if not Australia's, leading private wealth firms. So good luck to Charlie. Hopefully one day, Ren, you and I can make enough so he can manage our money.
Yes, yeah. No, shout out to Charlie, doing some really cool things. But let's get into it.
News and markets.
All right, Bryce. Well, a lot of news in Australia and around the world, but we wanted to start by just taking a breath because we are officially one quarter down in financial year 2025.
Far out.
It goes quickly. And look, it's been a tough quarter for markets. We had the horror global bloodbath, news.com.au headline that I will never stop quoting after stocks fell in August. Nvidia wobbled and the whole world shook. Japan had its crisis and the whole world shook. We've had Star Entertainment fall 50% in a day. We've had the mining stocks get beaten up as lithium and iron ore fell, although iron ore has bounced a bit recently. But look, it's been a really tough quarter. With that happens, it sucks. So how have we gone overall?
Well, with all of that in mind, Ren, you'd be surprised to hear that the ASX 200 has had its best September quarter since 2013.
Wow.
There you go.
There you go.
So, look away if you had just, if you'd been overseas, if you'd just not looked at your portfolio, not read the headlines, you would have checked in at the end of this quarter and seen that the ASX 200 was more than in the green. As I said, best quarter since September, returning 6.5% for the 3 months June to September.
Yeah, if you were just dollar cost averaging, maybe automating your dollar cost averaging into a portfolio of index tracking ETFs, you would be very happy right now.
You'd be loving it.
I think that is the message, that everyone who tells you to wait for the right time to buy, everyone who tells you they can time the market, well, there were plenty of people that were sitting on the sidelines this quarter, especially in August. The market timers were out in force as the market started falling and people were saying there's more to come, stay on the sidelines, just wait. Well, if you had waited, you would have missed the best September quarter in 11 years.
Some of the big performers for the quarter include, the best performing was Zip, up a whopping 94%
This is in the ASX 200, isn't it?
200,
Yeah.
So Zip, 94% in the 3 months. Charter Hall, up 45%. Guzman IPO'd, they were up 44%. Breville, 29%, and Hub 24, 28%.
So a great quarter, long may it continue, but just a reminder to just stay the course, stay invested. Time in the market beats timing the market, because timing the market is nigh on impossible.
Fool's game.
But look, that is not the only part of the Australian economy that is celebrating. Jim Chalmers is also popping champagne after delivering his second consecutive budget surplus.
Yeah, I think it's the first time that this has occurred in almost 2 decades as well.
Back to back.
Back to back, which
Jordan
is pretty
96,
phenomenal.
97.
So a $15.8 billion surplus, which was well above expectations that they delivered in May. This was driven by lower federal government spending. So yes, pat on the back to the government. Good news story there. However, they did come out and say that they don't expect it to be the same this time next year. But hey, nonetheless, a surplus is a surplus.
Now, one point I made in our daily email that I just wanted to bring to the podcast is how different news outlets can report the same set of information in completely different ways. And this really came through in the reporting around the budget. So from the ABC, their version of reporting around this budget story, revenue from income tax and company tax fell.
Yeah.
Implicit that perhaps we should be taxing companies and high net wealth people a little bit more. The other way to report it from the AFR, that income tax as a percentage of government revenue hit its highest level in 25 years, perhaps suggesting we should be cutting those tax rates. So just exactly the same data, 2 different ways of reporting it. I thought that was an interesting juxtaposition that came out.
I think I saw the first headline and was like, oh, that's interesting.
Yeah.
And then, it is interesting. But Ren, to close out today, headline that grabbed my attention is that we've got another airline trying to compete for the major routes here in Australia. Koala Airlines is joining.
Yeah. Now, to be fair, we don't know what routes they're going for yet. They haven't said, but that is a minor. So Koala Airlines is trying to succeed where Bonza and Rex have failed. Both of those airlines went into administration in 2024. Bonza after only 14 or 15 months in the skies. But Koala Airlines.
There's if it wasn't last night, there's a Four Corners coming up or a 7:30 report that goes into this in a bit of details and how they interviewed the executives of Rex, and they go into detail on how ruthless and I guess aggressive Qantas is when these new guys come to market, and just they use the power that they have essentially, and just it's so difficult for these airlines to literally get off the ground.
Now, 2 fun facts and 1 clarification. I need to fact check myself. Bonza was actually in the skies for 16 months. I undersold them by 1 whole month just earlier, so you got to give them their full credit. But 2 interesting points. So you make the point that Qantas is so powerful. The Qantas and Virgin duopoly, how much market share do you think they have in Australian domestic air transport?
Over 70%.
And for context, so Woolworths and Coles, the duopoly, they have about 2/3 of the market, about 66, 67%. The beer duopoly, the Asahi and Kieran, which own most of the beer brands in Australia, they're about 80%. So that's kind of market consolidation we're talking about with duopolies.
Does this include Jetstar?
Yeah, includes Jetstar.
On Qantas'
fully
side.
Wholly owned by Qantas, yeah.
Well, like 95%.
Exactly, 95%. It is
nuts.
consolidated like nothing else is consolidated. So when you say, Qantas are ruthless, that's why. Yeah. Because they have so much power.
It's unbelievable. Just a side note as well, Koala Airlines, they've actually been around since 2018. They're an Australian airline. Never heard of them.
Yeah, so they bought a desert touring company to get some licenses or some planes and stuff like that, but they haven't been in operation in commercial passenger travel. So that was 1 fun fact, the duopoly. The second fun fact, do you know what the most lucrative airline route in the world is in terms of revenue?
Yeah, Melbourne to Sydney.
Sydney to Melbourne. Second place, New York to London.
Yeah.
So that's how lucrative parts of this, the Golden Triangle, Brisbane, Sydney, Melbourne is, and Qantas and Virgin own 95%, and they're not giving that up without a fight.
No.
Yeah.
Well, good luck to Koala. I hope for the sake of Australian airline industry and competition, they do last a little bit longer than 16 months. Also for regional airlines as well. It'd be interesting to see what routes they are going to be taking.
And we should also, while we're talking about airlines, just mention that Qatar Airways have bought 25% of Virgin. So Virgin were looking at doing an IPO. I imagine this now gives them a bit of capital to do whatever they want to do. But it's interesting
you block Qatar coming into the country or giving them spots at the airport, yet you let them buy 25% of a national carrier.
Is Virgin a national carrier?
Well, I mean, good point. It's not. I wouldn't say national carrier, but it
is interesting.
Pretty Aussie.
I agree. Yeah. It is. There's a lot interesting about the airline industry, and I said it about a year ago, and I think there were some negative comments on YouTube, but I'll say it again. I think I will go my whole investing life and never invest in an airline.
Directly.
Oh, you mean like through the ASX 200? Yeah, sure. But yeah, never directly invest in an airline.
Yeah, fair call. Well, if you've enjoyed the headlines and would like to keep up to date with everything else that is going on in the world, make sure you subscribe to our daily newsletter. Link in the show notes and description.
Mr. Beat up. Mr. Beat Up.
I have the beat that describes that moment accurately.
So welcome to Mr. Beat Up. In this segment, we've got Simon here. Simon, welcome back.
Great to be here in the new studio.
Yes. Now, this segment is all about you bringing a stock to the table that has been beaten up, and more importantly, has probably been beaten up unfairly, or the market has overreacted.
I think that is the key word that we've been honing in on, overreaction.
Yeah.
Because what we've learned is that the market is a temperamental and moody teenager that any sign of bad news or hardship seems to massively overreact. And Mr. Beat Up here is our voice of reason. He is our sensible parent that sets things right and tells us when the market's overreacting and potentially there's some opportunity.
That's my job.
That's your job.
What I'm here for.
And Simo, we've had some successes so far. Well, so far you've picked Tesla and Nike.
Yeah.
Nike. Everyone can go and have a look at those episodes and performance since then. But today we've got a heavy hitter that's been facing some serious turbulence. Dun. But before we get into that, what are you actually looking for in a Mr. Beat Up candidate?
So just briefly, some of the key criteria is stocks down significantly from the all-time highs, ideally 30, 50% plus, negative media attention, leadership issues, strategy issues, making mistakes, missing their financial expectations. But crucially, as we alluded to at the start, the market's probably overreacted to the short term. Stock price doesn't accurately reflect the long-term potential.
Now, we've been inundated with requests since you first came on the show, Simo. In the Facebook discussion group, there's been chat, and our contact form, equitymates.com/contact, there's been a number of different requests. But I think we've got to say one company has really been overweight in terms of the requests.
Hi Equity Mates, I'm relatively new to investing and have been watching Boeing stock drop. I'd love to hear your thoughts on whether this is a long-term opportunity or if the market's right in punishing them. Can you cover it on Mr. Beat Up?
Hey guys, love the podcast, long-time listener, first-time question asker. This is one for Mr. Beat Up. I've been seeing a lot of news about Boeing recently, and I was just wondering, what's your take? Is it a good time to buy?
So Boeing, yes, been a very rough ride. Down 40% year to date, 64% from its all-time highs.
Yeah, now I think a lot of people have probably seen the headlines about Boeing in the news, but let's give us the Cliff Notes version of what's happened.
Yeah, well, I knew it was bad because of the headlines, but actually doing this deep dive, it's quite shocking, really, what's been happening. Problems really began back in 2018, 2019. There was 2 deadly 737 crashes within a space of 5 months, killing hundreds of people tragically, and that led to the grounding of all the 737 planes. COVID hit in 2020, and Boeing's problems have just escalated even further since then. There's been multiple near disasters, parts falling off planes. We've had whistleblowers raising safety concerns, and then 2 of them died under mysterious circumstances. They've actually recently...
That was crazy.
Yeah. A lot of these things you forget about.
Whistleblowers died
It's
before
crazy.
giving testimony.
We could probably spend the whole episode diving into some of these things, but really, there's been so much going on. It's been really beaten up.
They pled guilty to misleading air safety regulators. More recently, the machinists or machinists? Yeah. 30,000 of them are on strike. Reports are that it's costing Boeing $50 million a day.
Incredible.
They've just stopped production of a couple of different lines of planes because they don't have the staff to do it. When we flew to Melbourne for our live show, the back fell off Simon's seat.
Yeah, we've actually got some footage of that. Maybe we can get it into the YouTube video.
Yeah, so it's all going wrong.
Yeah, so stock's down 40% this year alone. So it kind of ticks that criteria of stocks down. It feels like for good reason. So the question then here is for you, Mr. Beat Up, is this an overreaction?
Look, I don't actually think this one is an overreaction from the market. This is some serious stuff, and the financials are actually pretty bleak. They haven't made a profit in 5 years. They've actually lost $33 billion since then.
Wow.
Their debt has skyrocketed. So I think for me here, the question here is it an overreaction? Probably the better question is, why would actually anyone look to buy Boeing stock, and does it have a good future ahead of it?
So is there light?
Well, I think there's two things we should cover here. Firstly, we'll just briefly look at what they're doing to sort out this mess. And then secondly, and most importantly, let's zoom out and look at the bigger long-term picture. So I'll start with the current issues. There has been a few notable things they've done. Just last month in August, they brought in a new CEO, third in 5 years.
Oh, no.
This guy, Cully Ortberg, he's an aerospace veteran. He's a mechanical engineer by trade. The previous management was criticised as being too corporate, too profit-focused. They were actually based in Chicago.
Too profit-focused, but lost $33 billion in the past 5 years.
Too focused on the numbers, not focused enough on actually delivering planes efficiently and safely.
Core of the business.
Forgot the core. He's actually already relocated to Seattle, where they're actually produce and manufacture planes, where that all happens. So his appointment's been pretty well received. They've got the right guy in, it seems. He's been tasked to fix the culture and refocus on getting back to basics. But, you know, they've got thousands of suppliers, thousands of pieces go into these planes, thousands of employees. There's no quick fix here. But another good thing they've done, they've spent $8 billion acquiring Spirit Aerosystems. They make the fuselage parts of the planes, among other things. And this acquisition is part of their strategy now to try and get more control over production to improve safety and quality. And prior to the strike, some good progress is actually being made on production deliveries. They saw some good uptick in those numbers. And they actually have these shadow factories where all the job is to fix planes because of all these issues had. And they were actually talking about closing a couple of those. So things are starting to look better, but the big issue now is just sorting out these strikes. It's costing them a fortune. They need to swiftly resolve this and actually resume production delivery.
Yeah, at the time of recording, the machinists want a 40% pay rise. Boeing has said 30% pay rise is their best and final offer, but it's costing them $50 million a day. Like,
where do you draw the line?
They've chosen a good time to strike.
100%.
High leverage time to strike.
100%.
So I think, Simo, they're all sort of short-term fixes. Like, you know, let's assume the strike gets sorted. Let's assume that they get through it. People would be thinking about Boeing more long-term. So how are you thinking about Boeing long-term?
I think it can be simplified down to two things, really. The world needs Boeing, and the US definitely needs Boeing. So if I start on the world needs Boeing, it's, again, quite simple. They're part of a duopoly. The company, Boeing, is one of the world's two manufacturers of large commercial jets. And despite all the headlines, companies are still buying from them. It's either them or Airbus. And there's ridiculous barriers to entry to this industry. So there's nowhere to go. It's Airbus or Boeing.
Yeah. I'd love to see like a Lockheed or something just be like, we'll give it a crack.
Watch this.
Yeah. we can make FA-18s, or F-35s these days. We can probably do it.
But there is the Chinese competitor floating around, Comac.
Oh, yeah. You're a big fan?
Ever heard of them?
Yeah, so There's a company, Comac, they're trying to get in the game. It's still pretty early days, though. They only delivered 2 planes last year.
Yeah.
Their goal is to expand production annually to 100 a year by 2030, but even that is seen as quite ambitious. So I think people are thinking they might capture some domestic demand in China, but less likely elsewhere, at least in the next 5 to 10 years.
I also just think that is a total number. We were speaking to someone the other day at an airlines, and they were saying Boeing was meant to pump out over 2,500 in the last 2 years, and Chinese are coming in.
No, well, yeah. But, like, for example, Boeing's in the past quarter delivered 83 commercial planes.
In a quarter.
Yeah.
Which is well below what they should be.
Yeah. But it's not like, we laugh at 2, but it's not like anyone's producing, like, thousands of planes a quarter.
But they should be.
Not a quarter.
No, not a quarter. A year.
Yeah, I think hundreds a year.
Close to 1,000.
Okay. All right, well, let's go. Before the issue started, let's go Boeing plane deliveries 2017. 763
Close
in 2017. Yeah. Hundreds, close to 1,000. We were both right. Anyway, Simon, this is your segment.
Yeah. So small,
tiny.
small fry at the moment. It's Airbus or Boeing. So
it's also just like which major airline is buying Comac planes and going to their shareholders and going to their customers and saying, we feel comfortable with this decision.
It's just Chinese airlines.
Yeah. It's not like Qantas is like, we can save $1 here.
Yeah, exactly.
No. So I also can't see the US being like, yeah, sure, guys.
Yeah, Delta, you can buy
Go and
Comac.
buy US. Yeah. Not going to happen.
So,
which leads you to your second point. The US needs Boeing.
Exactly. Boeing has been a key partner of the US government for pretty much its whole 100+ year history. Actually dates back to the start of the First World War. And throughout the years, the US government has worked really close with Boeing to help create jobs, grow the air passenger industry, grow US exports, and of course, to work with the US in their military planes and aircraft. To put some numbers to it, last year, 2023, Boeing was the 5th largest defense contractor for the US and earned $33 billion just from the US government. And in the US, they employ over 150,000 people. So vital contribution to the US defense, vital to the US economy. And many people just think this strong link makes it too big to fail company. It goes into that bucket. And for Boeing itself, actually having 30 to 40% of its revenue come from the US government, that actually gives it quite a bit of stability. Even when the commercial issues it's having at the moment, it's still got 30, 40% of its revenue locked in with the US Defense Force.
So that's an argument that the US wouldn't let it fail. And I think one thing that we haven't spoken about yet that sort of supports the duopoly is just all these aircraft manufacturers have massive order backlogs whilst there's like a growing demand for planes in general.
Yeah, exactly. This blew my mind as well, actually, looking at this. So Boeing apparently has a backlog of around 6,000 planes, and that's valued at $500 billion worth of business.
Yeah.
So business they've got contracted that they need to fulfill.
And I think if you do that maths based on that 2017, 750 odd planes delivered, that's what, like 9 years worth of work.
Call it a decade's worth of work. And they've also got $60 billion from the US government locked in defense contracts. So they've got huge revenue, which gives them, years of production ahead. And it's not just the backlog either. The industry itself is in a pretty strong position. So Boeing and Airbus both have similar projections. They've said that the world will probably need around 42 to 44,000 new planes in the next 20 years or so. And this is driven mainly by regions like Southeast Asia. They're set to triple their fleets in the next 20 years. Air cargo is meant to increase by 2/3 over the next 20 years. And interestingly, that it's estimated that 70% of the aircraft around today are going to need to be replaced to meet global sustainability goals, be more efficient, basically. So world needs more planes. Where are they going to get it from? Airbus,
Comac.
Boeing. That's it.
It's a pretty interesting one. I think, as you said at the top, like it's not quite your classic Mr. Beat Up where we've seen like this intense, short overreaction to one piece of news that's pumped a stock 40%. This has been a drop since the start of the year, progressively. News headline on news headline on news headline, down somewhat 40%. Feel definitely justified. But there's so many, I guess, tailwinds, pun intended here, that it's just it could be one of those classic Buffett, even though he hates airlines, that sort of when everyone's absolutely running for the hills, they can often provide some good investment opportunities. And I'm not saying now's the time to do that, but like with everything that's in front of them, if they can get it right and this CEO can actually sort out production line, take control of what's important in the business, get back on top of their pipeline of work, who knows? It's pretty interesting.
I think, like to pour some cold water on all of this, like I completely agree with everything you guys are saying, but my question would be like, once it normalizes, like what's the level of expected
Upside.
growth that you, because it's like it's pretty steady, and like when they're not having safety issues and stuff like that, like they'll produce a pretty predictable number of planes and produce a pretty predictable amount of revenue and profit from that. And it's not gonna like 10 bag in 5 years or something like that.
The one thing I would be watching is that pipeline. Like if old mate who's just come in, can't remember his name's Kerry or whatever it was, if he can exceed expectations on delivery, then away you go.
Yeah.
Nice.
But look, I like it. It's certainly beat up. Let's see what happens.
Yes. If you have a stock that you'd like Mr. Beat Up to have a look at, go under the microscope, give his views, then make sure you head to the Facebook discussion group. And we certainly collect all of those that come through. And Simon, when you're next on, there's plenty to go through. So really appreciate you coming on and sharing your thoughts on Boeing.
Great to be here.
We're going to take a quick break, and on the other side, we have a Pimp My Portfolio with Adam Dawes. We'll be right back. All right, it's time for...
Pimp my portfolio. Pimp my portfolio.
That's right. It is that point in the show where we bring in a community member and an expert to hopefully improve their portfolio. And we are super excited to have Fee join us today. Fee, welcome to Equity Mates.
Thanks for having me, guys.
And joining us is our expert, Adam Dawes. Adam, welcome.
It's great to be here.
Now, Ren, if you can kick things off by explaining Fee's portfolio to the community.
Yeah, so I'm going to hazard a guess that Fee's gone a bit of a core and satellite approach here. And the core is made up of ETFs. So 5 ETFs, the Vanguard Aussie Shares ETF, Vanguard All World SX US, Vanguard Total Market, and then Beta Shares NASDAQ 100, Global X, FANG Plus. So those 5 ETFs are a bit under 60% of the portfolio. And then we've got some individual stocks. West Farmers, 19% being the biggest one. Macquarie Group being the second biggest one. But we've also got Drone Shield, GQG Partners, Pilbara Minerals. So a few notable names in there. So Dawesy, we always like to start with a bit of a nickname.
Yeah, so I think Fiona does Pilates, so she's got some amazing core strength in this portfolio. So there you go.
Nice. Strong core.
You have me pegged, Adam.
Hey, there we go.
Fee, is that a fair assumption, I guess, from both Ren and Adam around broadly how you've thought about building this portfolio?
Yeah, absolutely. I have been investing almost 20 years. I started as a teenager with my dad with a few $1,000s and have definitely refined, I think, my approach over those years. And yeah, I guess I've tried to build up that core aspect, but then still have a bit of fun with those specky stocks. You know, some of them work and some of them dogs, but
So Dawesy, where would you start looking at this portfolio, the core and satellite structure, and then I guess what's within them?
Yeah, so absolutely. That's one of the things that we like to talk to investors about is that core versus satellite. So having that good, strong core that's going to then do the test of time. Just looking into that core, the portfolio does have around about sort of 46% in international, potentially there's a little bit too much. Now, the portfolio would have been doing very well with all of those international holdings. International's definitely beaten Australia and definitely beaten, a lot of the rest of the world. And what you've got there as far as the Global X, the beta shares, NASDAQ, they're sort of doing the same kind of thing. So potentially looking a little bit of that concentration risk in that. But look, they've all done really, really well. So the first thing I'd look at is potentially just reducing some of that international weighting or bringing that down a little bit to diversify across that. And then the second thing that I'd potentially look at in sort of more on the satellite side of things, you've got a large holding in Wesfarmers. How did that come about?
I used to work there, so it was like a share purchase plan. So that's why it's quite a large. I have sold down some of it, but it is still quite a large. No. Wesfarmers is a fantastic business. Did you sell the Coles as well when you got that? You got rid of that? Yeah. I got them after they diversified, so just pure Wes.
Okay. Right. Yeah, no, so it's done a fantastic job and comfortable. I usually like to have a 5 to 10% weighting in any one stock. From that, you can go up to 20%, so you're at 19 for all good quality blue chips. So I think you're okay in that space, going forward. Another thing that you sort of got, I do like Worley's. I think that's a really good business, but you'd look to top up some of those ones that are in that sort of 1%, 2% range. When you've got a portfolio, you need to have sort of 5% in any one stock. So as I would do sort of regular contributions, and I'd be topping up those good quality businesses. Worley again, PLS or Pilbara Minerals has been a tough one for everybody, and that lithium thematic is going to continue to sort of keep moving. So comfortable with the Macquarie, those kinds of things. Drone Shield again doing very well. The concentration risk, I think, is something that you need to look into the portfolio. Diversifying out a little bit from the international, potentially having some more Australian or some more sort of property. I don't see a lot of property in there. So I don't know your personal circumstances, but you'd like to have a sort of a 10% weighting in some property in the portfolio. You can use ETFs or something like that, and potentially then some fixed income. I don't know where you are in your stage of life, but some kind of defensive income in there will also help broaden out that portfolio. So, but I think it's looking pretty good at the moment.
So, Dawesy, with those two asset classes there, property and fixed income, are there any particular ETFs or funds that you point clients towards?
So, VAP is a great one for the property sector. It's got about 35% in Goodman Group, so it's done very, very well. So, I mean, it's still comfortable to sort of do that diversification, on the property. And then some of the bonds or fixed income, you can definitely look at some of the Aussie bonds or the international bonds. Now, at the moment, they're out of favour because of where we are in the interest rate cycle. But if interest rates start to come down, you want to own bonds, and that's the right time to be picking them up. So if you've got a view that the interest rates are going to come down in the US sometime this year, potentially look at some international bonds. They will struggle at the moment, but as interest rates start to come down, that's beneficial for bondholders. So you're sort of positioning the portfolio for the next 2 to 3 years.
So, Fiona, a few things to go away and think about there. Were there any other questions while you've got Dawesy?
No, that was really helpful. I was looking at Goodman Group, so that is a good steer to look at fixed income and property. I guess one question I had was sort of balancing the size of the portfolio, like the number of stocks is manageable, do you think, for, like a novice investor like me?
Rule of thumb is that generally you want to have 12 to 15 stocks in a portfolio and then adding some international in there as well. So maybe 20 stocks max is sort of where you want to be. A lot of
Is that with a core?
Yes, that would be with a core, and I think if you look at managed funds, they've got like 800 stocks, and they're in everything. I don't think you need to be there. I think you need to have just a good concentration of, let's say, 15 stocks with a core, maybe 20. That you'd sort of max that you'd be running, and then having a 5% to 10% weighting in any one of those, and then managing that percentage basis as things start to go up, taking some profits, and potentially as things go down, you're taking that off the table to find something else to grow.
Amazing, super helpful. Thank you, Adam.
That's okay.
Well, I think some things there to think about. I think the way that the portfolio, the core is constructed is probably reflective of a number of people in the community, with the Vanguard total market there and a few others. So some opportunity to probably condense some of those as well. There's a bit of overlap with BetaShares, NASDAQ 100 and Global X Fang Plus, although that has absolutely been ripping.
Yes.
Great.
Well, they've both been ripping because they overlap.
Yeah, because they overlap. But opportunity just to think through, perhaps how you can condense some of those ETFs into one, given the underlying holdings are very similar. But thank you for submitting, Fee. It's been fun.
Thanks so much, Bryce and Ren.
Well, if you would like to submit to Pimp My Portfolio, head to equitymates.com/contact. And similarly, if you'd like to submit to, if you'd like to chat to Adam and his team, head to equitymates.com/advice and we'll put you in touch. And Adam, thank you as always.
It's great to be here, guys. Thank you.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.